When you think of Niagara, what comes to mind? Probably the falls, right? Well, the Ontario government is thinking way, way bigger. They've got this massive plan to turn the entire region into a year-round economic powerhouse. And in this explainer, we're going to unpack exactly what that means.
And they've given this whole vision a very catchy and, you've got to admit, a very ambitious name. When Premier Doug Ford said he wanted to create the Vegas of the North, he wasn't just dropping a snappy slogan for the news. He was signaling a huge, fundamental shift in strategy for one of Canada's most famous places. So what's really going on behind that soundbite? Is this just about building more casinos and putting up more neon lights? Or is there a much deeper, multi-billion-dollar transformation happening right under our noses? Let's dive in.
All right, first up, we're going to get right to the heart of it. We're looking past all the marketing buzz and deconstructing the official government plan. It's called the Destination Niagara Strategy. And here's the absolute core of the idea. The goal is to totally change what Niagara is. The whole plan is to move it from a place you just visit for a weekend in the summer to a place that drives the economy 365 days a year. A total game changer. And to make that happen, the government has laid out this really clear roadmap. It's built on 5 key pillars. As you can see, it starts with big new attractions and world-class gaming. But look closer. It's also about leveraging the amazing wine and food scene and then pouring huge money into transportation and culture. This isn't just one idea, it's the whole shebang.
That phrase right there, year-round economy, that is everything. What it really means is creating stable, permanent jobs that don't just disappear when the summer tourists go home. We're talking about actual careers in logistics, in retail management, in culture. And that is what completely changes the demand for real estate. It shifts the market from a place you just visit to a place you move to and build a life.
And to make this vision real, we're talking about some absolutely massive projects. Think about a major theme park, a landmark observation wheel that could rival any in the world. And, this is really cool, turning the historic Toronto Power Generating Station into a 5-star hotel. These are not small tweaks, These are projects designed to make people stay longer, spend way more, and come back again and again. Okay, so a big vision is one thing, but it takes serious cash to make it happen. So in this next section, let's look at the huge infrastructure investments that are already paving the way for all this growth.
And believe me, the money is already flowing. The province has put up an initial $35 million just to kickstart new attractions and beef up the cultural scene. So this isn't some far-off promise. It's a funded plan that's happening right now.
Now, if you're going to have all these new workers and visitors, how are they all going to get around? Well, that's where this comes in. Almost $43 million is going into upgrading local transit, and that includes buying 124 new buses. It's a foundational piece of the puzzle, really building out the capacity for what's coming. Now, this right here might be the most critical part of the entire strategy. The GO train expansion is like creating a new economic artery, connecting Niagara directly to the heart of the country's economy, the GTA. This makes commuting for a job or just visiting for fun totally seamless. It pulls Niagara into the GTA's orbit like never before. And it's not just about trains. They're also tackling major road and bridge projects to handle all the new traffic. Things like twinning the Garden City Skyway and expanding the QEW. That's crucial stuff. It's not just for tourists, but for all the freight and commerce that a bigger, stronger economy depends on. So all this government policy and billions in infrastructure spending, it doesn't just happen in a bubble, right? It has a real, tangible impact on the ground. So next up, let's explore that ripple effect on people, on housing, and on real estate. And what's really fascinating is that this isn't just a future plan. The trend has already started. Even before these huge projects really got going, from 2016 to 2021, Niagara's population grew by almost 7%. That's faster than the provincial average. People are already voting with their feet. And the official forecasts? They're just staggering. The region is planning for more than 214,000 new residents by 2051. I mean, think about that. That's a massive demographic shift that's going to require tens of thousands of new homes and put incredible pressure on the housing supply. You can actually see this pressure building in the rental market data right now. As this slide shows, official reports are already confirming it. Across the St. Catharines-Niagara area, vacancy rates are getting tighter and tighter, and average rents are climbing steadily. It's a classic sign that housing demand is starting to outrun the supply. So this brings us to the core investment idea from the source material. For anyone looking at Niagara versus the GTA, the appeal becomes really clear. Niagara offers this unique combination of lower entry prices for property, but with fundamentals like job growth and rental demand that are literally being supercharged by government policy.
Okay, so the government policy is clear, the economic trends are all pointing in the right direction. What does that actually mean for an investor? Well, our final section frames this whole thing in terms of timing, risk, and the reality of a market that's in the middle of a huge change.
The source material uses this really powerful baseball analogy. It calls this moment a classic early innings opportunity. And the idea is pretty simple. The big government decisions have been made. The infrastructure money has started to flow, but the full impact on property values, well, it hasn't been realized yet. This slide really breaks down that timing argument perfectly. Today, you've got the policy in motion, but a lot of the pricing still reflects older, legacy ideas about what Niagara is. Tomorrow, though, when all the projects are done and the transformation is obvious to everyone, the market will have likely re-rated. And that just means prices will have already caught up to the new reality. And here's the crucial point. Waiting for every hotel to be built and every train to be running, waiting for absolute certainty, well, that often means you've missed the boat. You risk buying into a market after all the big price jumps have already happened. But of course, let's get real for a second. Any smart strategy has to look at the risks. And this is not an overnight thing. These are long-term projects with long timelines. A lot of the success depends on private investment coming in to match the public vision. And you know what? Not every single neighborhood is going to benefit in the same way. Plus, investors have to be really smart about complex local stuff, like zoning and the rules around short-term rentals. And that brings us to the key takeaway from this whole thing. The government's strategy is like a powerful tailwind pushing the entire region forward. But success is absolutely not guaranteed for everyone. It's going to come down to the details, picking the right property in the right micro-location, like, say, near a new transit stop, and really truly understanding the local rules of the game. So we'll end with this one final thought. As all the pieces of this massive, multi-billion-dollar puzzle start to fall into place, changing Niagara from a seasonal stop into a year-round economic powerhouse, you just have to ask yourself, is the biggest risk here the uncertainty of the projects, or is it the certainty of a much more expensive market if you wait too long?